Good afternoon. This is Michelle Savage with XReal US, and you are here for our webinar, Validation Rules for US GAAP. Participate in the public review. We're pleased to have with us today Lou Roman. Lou is the chair of the XReal US Data Quality Committee. He is also vice president of XReal Services for Merrill Corporation. And our second speaker is Campbell Pride, president and CEO of XReal US. Before we get started, actually, let me run through a couple of logistical points. If anyone has issues with their with accessing the slides, the visuals, and the audio, please email us at info@xbrl.us, and we'll do our best to get you back online. If you have questions that you'd like to pose to our speakers today, you can put them in the Q&A link that you see at the top of your screen. And we'll take those questions as they come in. And finally, we are offering CPE credit for today's session. And so if you have opted to receive CPE credit, please make sure that you respond to the CPE questions that'll be asked at 2 points during the poll. And also, even if you did not opt to receive CPE credit when you signed on for the program, go ahead and respond to the questions, and we can make sure that you get your certificate later on after we receive payment. So just want to make sure that that's all squared away. And with that, I'm going to turn it over to Lou Roman. Lou is going to take us through the mission and the goals of the committee, and then Campbell Pride is going to walk us through the rule set. So with that, I'll turn it over to you, Lou.
All right, some information about the Data Quality Committee itself. The mission is to develop freely available guidance and validation rules to eliminate consistencies and errors in XBRL data in order to enable automated analysis of the data. So in that mission, notice the word freely. The committee provides these rules free of charge. We want all SEC filers to use the rules, and knowing if there was a charge for using them, that some companies would not use them, the group decided the first day we met a while back that these rules would be free to any users of them. There's also, with these rules, there's been a serious amount of investigation and due diligence put into the creation of the rules, and we're confident and eager to provide the rules to you. So that's the mission. On the next slide, the activities of the committee. The first one is to develop unambiguous guidance on how to tag financial data using freely XBRL and freely available automated validation rules to verify compliance with the guidance and prevent or detect tagging errors. The DQC guidance and rules, they do prevent errors and improve consistency of tagging. And we'll talk more about that later, but it also must be said that the automated rules can't catch everything that could go wrong in an XBRL filing. It's not possible, but it still does take human involvement to get it right. So keep that in mind, but also know these rules are a substantial piece to getting it right. They're very key for that. The second activity is to obtain input through public exposure of its proposed guidance and validation rules and incorporate the input as appropriate into the final approved guidance and validation rules. And that's really a big part of this webinar is today. It's that public exposure period of the rules. The third activity here is that we have regularly scheduled meetings with SEC staff. Very key, because if the SEC didn't acknowledge the Data Quality Committee, or if the SEC prepared Edgar Filer manual rules, or if they prepared their staff observations and they conflicted or stepped on what the DQC rules and guidance are doing, then I would say that DQC is not effective and probably shouldn't exist. But it's much the opposite. The DQC meets with the staff face-to-face regularly. We share what we're doing and all the observations that are out there. And there's a very good working relationship between the SEC staff and the Data Quality Committee. So those are the activities of the committee. On the next slide, we'll see the members of the committee. And it really includes a diverse group of functions from the XBRL market. Having many functions has helped a lot with obtaining different perspectives from the different groups on what we are producing and what we should be producing. The committee includes members of the analyst and data provider community, Under the data providers, our most recent addition is Morningstar. They're an investment research company. And Joe Guo is the person from Morningstar that has joined us, and we're very glad for that. We also have academic, preparers, filing agents, as you can see. And lastly on the slide, we have 2 observers of the committee. They aren't official members, but they are observers, the FASB and the IASB, which are very valuable in providing input. We're glad to have them. That's our membership. On the next slide, we have the public review of the 7th rule set. So we create a bunch of rules and we call each one a rule set, and we're on number 7 of those. The 7th set of rules from the DQC is currently out for public comment, and we invite you to participate in that review. As you can see, it's a 45-day public review period that will close on September 10th of 2018. The importance of your participation: first, to refine the rules that you and your clients should adhere to. That's one of the main parts of this. We put out rules, we need them refined before we call them final and publish them. And the second thing is that the importance is to receive more input from the creators and the users of the data. That will equal better rules. We've seen that in the past. The input needed by the Data Quality Committee: tell us if you have concerns with the proposed rules and the guidance. We ask, if possible, that you propose revisions. If you're able to come up with how they should be revised, please provide that. And then thirdly, if possible, provide us with the impact on the usability of the data, if you can show that as well. But any comments are welcome. Tell us if you have concerns with the proposed rules, please. One last thing here on this slide is that the rules for Rule Set 7 pertain to US GAAP filings only. This set of rules has no implications on the IFRS taxonomy or IFRS filers. However, if you recall, Rule Set number 6 did have IFRS rules included, and that was very pertinent to IFRS filers. And IFRS filers should also be aware that we will have a Rule Set number 8 in the future, and that's likely to have many IFRS rules included. That is our plan right now. So if you're an IFRS filer, watch for Rule Set number 8 as well. We haven't taken our eye off the IFRS rules. It's just that this set pertains to US GAAP filings. Before we go to the next slide, I want to let you know, I was recently asked and get asked frequently, are the DQC rules working? So let's explore that on the next slide, because it's a very interesting graph that we have here. This is, we've taken the rules which says that certain tags should never have a negative value. So that's what this graph pertains to. It's rule set, not rule set, but rule number 0015. And we recorded and looked at the amount of errors that have occurred for those elements that should never have a negative amount. If you look at this graph, on the left side, it's relatively high amount of errors. That's the quantity of errors on the left side, the vertical axis. On the horizontal axis is time. So it starts back in that's 14 is the first one, 2014 Q1, and then it goes all the way to the present. Each bar is showing 1 quarter. The rules came into play in about the middle of this graph, actually in November of 2015. And even prior to that, they were out there and people started using them. So that's when these bars start going down. In other words, the number of errors that are occurring for these elements has been reduced. And if you look at the far bar on the left, that is a 10K filing. It's the filings that were received in Q1 of 14. It's a high amount of errors. If you go over 4 more bars, it's the one that says peak error count above it. That's again a 10K filing season. That's about when the rules started, was subsequent to that. You see they start dropping, but if you go 4 more bars, there's a very short one. It's 2016 Q1. That was the first 10K that had rules being published and followed. You can see a significant drop from K to K to K, and then subsequent to that, it stays low as well. And you can see the one that says 10K filings above it. That one is actually higher than the previous 10K, but we brought in more negative value elements that shouldn't have a negative value. And that's why that one's a bit higher. Long story short on this slide, yes, the rules are working. They have substantially reduced errors for those things that they do apply to. Let's go to the next slide, which is a different rule, but another graph as well. And the next slide will show you the inappropriate access member combinations. Now, again, the rules came into effect at a certain point here, but again, this one isn't as dramatic of a drop, but it does drop, and we can see that there's a benefit to having these rules out related to this rule. My goal on all of these, and we've done graphs for all the different rules, these are only two that we want to show right now, but the takeaway is there's a significant drop in the rules once these rules are published and used. But another takeaway is there's still not, it's not zero. And that is, you know, my pie in the sky goal is let's get these to be zero errors for those rules that are published and that are out there. That should be the case, and we know that that's not the case. So hopefully if you're on the call and aren't running these rules, please do so, because we do want to eventually get to a point of having almost zero. I know zero may never happen, but that's what's going on with the rules. And again, I will say before I pass it over back to you, Michelle, is that there is a substantial amount of work that goes into these rules, and we're confident with these rules and eager to provide them to you because we want to see the improvement in XBRL filing. Michelle, I'll pass it over to you.
Lou, thanks. Before we move on, we just got a question about Data Quality Committee Rule Set number 8. Is DQC 8 expected to be available for December 31st, 2018 filing season?
The answer to that is yes. We would definitely plan on that, because that way IFRS filers, which most of them, they file annually, and most of them are December 31st calendar fiscal year ends. We'd love to have the December 31st, 2018 filers for IFRS use those rules in Rule Set number 8 for their annual filing. The committee will work with that in mind. Obviously, no guarantees, but yes, definitely that is the expectation for Rule Set number 8.
Thank you. Okay, so we're actually going to take some CPE questions right now. And so I'm going to pull up our first poll. And again, if you're interested in getting CPE, either if you've already opted in for it, or if you kind of changed your mind and said, hey, I'd really like to get CPE credit, make sure that you respond to this first question that's coming up, which is activities of the Data Quality Committee include which of the following? Answer 1, regularly scheduled meetings with SEC staff. Is it developing automated validation rules that can be used by securities analysts to improve the quality of reported data? Or is it developing automated validation rules that can be used by SEC filers to improve the quality of reported data? So please record your answer, and then we'll move on to our next question. Just give this about another 15 seconds. Okay, I'm going to close the poll in a second here. Okay, now let's go on to the second poll. Okay, the question is, input sought by the Data Quality Committee during the public review of rules includes which of the following? Impact of the proposed rules on ease of XBRL preparation, concerns with the proposed rules, or is it concerns about the quality of XBRL prepared data? Which are the kinds of inputs that we're looking for? About another 30 seconds. Okay, I'm going to close this in just a second here. All right, thank you for giving us your answers. And now we're going to move on to the second part of the presentation. We're going to talk about the individual rules for public review. And for this, I'm going to turn it over to Campbell Pride, who is President and CEO of Extrail US.
Thanks, Michelle. So just to reiterate what Lou had said, one of the things that we do, the reason for the public review is to get comments from all participants involved in filing, and this makes the rules much better, and it means we can improve the accuracy and a lot of the times these comments also mean that we get feedback that we can send back to the FASB as well. So with that, this rule set version 7 is really aimed at really supporting the latest implementation guides from the FASB. As many of you are aware, there are a large amount of changes made to the taxonomies for revenue recognition. So there's a lot of disclosure changes that are being made. And so the FASB put out a reference guide or an implementation guide for revenue recognition. If you haven't read that, you should probably have a look at it. But one of the things we tried to do with these rules is if you hadn't read it, and you've got something that if you reported something that was inconsistent with their recommendations, the rule would basically flag that for you. So these rules basically will address those revenue recognition things and the areas where we're seeing issues and inconsistencies from the FASB implementation guide. The second area that this addresses, and this may not be really relevant for people quite yet, but it will be for year-end reporting, is the changes that were made to the pension disclosures by the FASB. So the FASB did a major overhaul in 2018 of the pension disclosure requirements in terms of how that should be reported in XBRL format. So the FASB's been working on this for a long time, but a lot of those changes now have come to fruition. So we work quite closely with the FASB on this to make sure that that we get those disclosures correct. So these rules will basically enforce the guidance that the FASB has issued in those implementation guides. So that's kind of the general theme of these rules, is the focus is on those two areas. So the first rule that we have here is something called mutually exclusive elements. And what this really is really addressing the conversion to the revenue recognition standard under topic 606. And the expectation from the FASB is that once you start reporting 606, they've got a whole new set of elements that you use for revenue from contract with customers. So if you're using those elements, the expectation is that you are not using the prior revenue elements that have been defined in the taxonomy. However, a lot of companies mix and match them and haven't done a clean break between those two different standards. So they kind of use some of the prior 606 elements and the 606 elements. And so this first rule, what it does is it basically looks at the US GAAP taxonomy and basically looks at your filing and then says, look, you've used some of these 606 elements, but you've continued to use some of these deferred revenue elements, for example, and the rule will basically flag that for you. And the way that it does that is it basically looks at what the FASB did in the taxonomy is where they split these revenue elements into two different sections. So it just looks where there's, like an intersection between those two in your filing, and it'll report those for you. So there are some cases where elements can be used in both, and we've tried to identify all of those. However, as part of the public comment process, we've had some comments come in that said, we use this element and it hasn't been deprecated. We think you should include this on the list. So that's where these exceptional cases, we want to hear about those because we don't want to flag false positives for this. One of the primary goals of these rules is to eliminate any false positives so people don't waste their time tracking down something that really isn't an issue. So we're kind of maniacal about that. So we want to make sure that there are no false positives. And if we are aware of any of those, we will amend the rules so they don't occur. The second element here is the second rule here, sorry, you can see here Rule 68, which is this geographical axes used with pension line items. This is really to make it much, much cleaner for investors and users of the data to understand what the pension assets are that are held in the pension funds. And the FASB had issued this guidance basically to say, look, when you're reporting pensions and you're reporting these assets that you have, don't dimensionalize, just create an axis and name what each of these investments that you hold are, and put them on this on the axes that define for those individual assets. And if those assets are held in different geographies, don't put another dimension in to break it up by geography. So we've added in a rule here. This is a pretty simple rule, but if you've basically reported your plan assets and you've broken up by geography, it's basically telling you shouldn't do that. The implementation guide is basically telling you should create a member which says, maybe US held equity security should be the member that you created, rather than creating an equity member and then splitting it up with the geography axis. So this rule's checking for that. The next one, another pension rule, Rule 69, is basically plan asset categories, component members. And what this is doing is basically, it's once again checking with the FASB guidance, and the FASB, this is kind of a little bit complicated, but there's a lot of examples that are in the FASB guide, and this is really where companies are doing additional disclosures about those plan assets, particularly when they're saying, that we're holding these assets in our pension plan that are like related party securities. Maybe it's common stock in the company, and if those amounts, there's additional disclosures there, they're required that you use very specific elements for those. And what this rule tries to do is it looks at the plan assets, it adds them up, and it looks at what you've reported. And if you've made these related party disclosures inappropriately, and it's going to warn you about that. The other item that it also looks at is assets that are within the plan asset category. And this is usually some footnote information. And rather than using the plan asset line item, they require that you use this plan asset category amount included within the plan assets. To get more details on that, if you want to understand it better, I recommend that you look at the implementation guide from the FASB. However, if it looks like it's a problem and you get this error coming up, then you should probably look at that. If you don't have a pension plan, obviously this rule is not going to apply to you. So if we go to the next rule, please, Michelle, I think that's Rule 70 on the next slide.
Campbell, we have a question. I thought we might want to just take a short break and take this question. The question is, if we think we have an exception to the new revenue element, and I assume this means to the new rule in the DQC, where should we send these inquiries? Is there a specific email we should send where we should send the inquiry?
Yeah, so and we're going to show you that in a minute, but on the XBRL US website, there's a comment, and then you can put the comment in and say, I think this element should be an allowed exception. So you can put that in the comments so then others are aware of it as well. And if you feel uncomfortable with that, you can also send it to info@XBRL US. But I think it's better if you put it in as a comment just on our website, then others can see it as well. And then also it enables, it means that we're just going to make sure that it gets addressed probably more promptly.
Great, thank you.
Okay, and we'll show that in a minute.
So this is the next page, Campbell, if you want to go on.
Thank you. Okay, so the next one is plan asset dimensional aggregation. So one of the issues that we've seen in terms of the plan assets, and a number of people analyze pension fund assets like BlackRock or Goldman Sachs. There's a lot of analysis that's done on this to understand where these pension assets are and what companies' exposure to different asset classes are. And analyzing this data in the past has been rather difficult. One, because when you go to add all the plan assets up, it doesn't add to the total, which can be very frustrating for people. So what this rule tries to do is to basically, what it does is it looks at that plan asset table, and then it adds up all the different security classes and makes sure that they add to the total of what the plan assets are for each individual pension plan. And one of the issues that we've seen there is that in some cases the plan assets that have been defined all the components aren't necessarily defined in the table. In other cases, there's just calculation problems. In other cases, they've created extension dimensions on that table that they shouldn't create. So this rule really is kind of very all-encompassing, and it tries to address these issues. And if you go to this is just a high-level description on the page here, but if you go to the website, it'll give you a detailed message as to what the issue is and how you should address it. And what the rule does is it goes and it looks at the plan asset total, and then it goes and it looks at the plan asset categories and adds up all the components, takes into account any subtotals that you may have in there, and then basically comes up with the total and compares it. And so we've run all the filings for the last year through this. And there's a number of companies which have issues in terms of this, and a lot of these issues relate to using inappropriate line items, or when they've defined these categories and these subtotals, they haven't nested the different asset classes. And this is all, how to do this is all documented in the FASB implementation guide. So if you follow that, you shouldn't be getting this message. But if you do get it, you can have a look at the rule, have a look at the FASB implementation guide. If you still have concerns about it, if you run these rules, put a comment in or reach out to us directly as well. Obviously, we want to make sure that this is that these things are correct. And if there's tweaks that we need to do to the rule, put those in the comment, and we can do that. So moving to revenue, unfortunately, these aren't grouped together. These numbers kind of got addressed as we were working through them. But Rule 71 is is basically called revenue cost single member. And what this is back to revenue recognition. One of the things that the FASB has done as part of this is required that when you report revenue on the income statement, for example, and you've broken that revenue down by different product categories, what you would do is create a dimension for that, and you'd have your different product types. So in most cases, companies will just report total revenue, then this rule really won't apply. But if you're on the face of your income statement, for example, you break revenue down into multiple components, then this rule will kick in. And what this rule does is if you've only reported one product as part of that revenue, it basically will tell you not to do that and to use something called the extensible enumeration element. And what this is addressed in the FASB implementation guide as well. But what the FASB require is if you've only got one product, you don't really need to disaggregate it because you've only got one thing. And then you can just report, hey, all our revenue is comprised of this individual product. And this is the extensible enumeration element, which was added in the US GAAP taxonomy in the income statement. And that's all documented as part of the FASB guidance. And I know the FASB's talked about this on previous webinars, but what this rule does is basically checks if you've made an individual product. This rule, however, also operates across the entire filing. So if you have additional disclosures in different parts of your filing, it'll also check that as well. So the expectation is that that logic should still apply. So the only area where just that you may want to be careful with this is if you've got an individual product and you're giving details about an individual product in an individual table, then it may be appropriate also to use the extensible enumeration in that table rather than using a dimension. And basically the rule that this basically follows is if you put the member on, or you take the member off the fact value and the value doesn't change, then you probably shouldn't be putting that dimension member on it. So basically this rule is enforcing that. So if you see it, if it comes up, That's what it means. Basically, you've got this individual product member on there, so you don't need that member on that value. The next rule, DQC 72, this was added because this is a new element. There's one company in the last since 2018 that's had an error for this. So this is very rare, but this is just using this particular element. And not using it, and using it on the defined benefit plan asset categories axes. So this basically just highlights the situation, and this is basically once again enforcing some of the FASB guidance that's been issued as part of the revamp that they've done to the pension plan asset disclosure section. If you want to go to the next one, please. DQC 73, plan asset categories, permissible line items. This basically what we were finding was the plan asset categories were being disaggregated. The information was being reported with them on inappropriate line items. Things about obligations were being reported associated with plan assets. They're totally incompatible. You shouldn't be doing that. So this rule kind of picks that up. But this rule, if you have a look at the details on the website, has a lot of line items associated with it, which basically say these are all the line items that can be related to plan assets, and it's a comprehensive list. So what we've tried to do here is say that these are the only line items you can use in conjunction with this axis. If you use any other line items on it, then it's inappropriate. And this list was provided to us from the FASB as well. Okay, the next two rules really relate to revenue recognition and reporting of performance obligations. So there's a lot of inconsistency in the way that this is done. The FASB's put a lot of guidance out on this, but still it doesn't seem to have got through. So these rules really address this. And the way that this was done in the 2017 and 2018 taxonomy is a little bit of a change to the way that this kind of stuff's been done before. This uses something called a type dimension. So if you, and there's been a lot of confusion about that, so this rule basically checks for these conditions. So the first one is nil values on a typed axis. Basically, you shouldn't do that. So this basically looks for that. And this is a situation where people are reporting a performance obligation into the future, and they put a nil value on there to indicate that this is the aggregate total. So this rule checks that you haven't done that. And we've talked about this on previous webinars as well. This rule just basically gives you, will flag it if that happens in your filing. Performance obligations with no durations. So basically this is just picking up the case. You're supposed to basically report the performance obligations and over which period they're going to be realized. So this basically identifies where those durations haven't been defined, although you've started to use elements which indicate that you have recognized that over a given duration. So if you want to go to the next one, Michelle. So 77, this is the satisfaction period with no satisfaction start date. Basically, you also have to indicate, this is the way the FASB has done this is defined. This is the start date, this is the duration over which this obligation will be recognized. You need to provide that information so someone consuming the data knows when those performance obligations will be recognized. And this just looks for where that start date axis has not been provided. So that's basically all the rules related to the recognition of the obligation. So there's two of the rules here. The first one is the revenue tax policy. This rule was there. We've had a lot of comments on this already, and this one will probably be removed. It's not really, no one has this error, and it's kind of a little bit ambiguous how you're supposed to do it. So basically what this rule was trying to do was to indicate, if you had opted not to disclose the sales tax, you should have a tax policy note. And this is just trying to ascertain that you had the right tax policy note there. However, that tax policy note, the expectation is that it could be used for other circumstances. So this rule here will not go into effect. So you can ignore that one. The next one was the ownership interest with no ownership axes. The FASB had implemented something called the ownership axes, and this is really to basically be able to report your holdings in either in subsidiary companies or investments in companies, which is different than something like the legal entity axes, which have been used in the past. So there's a movement away from using the legal entity axes to do this, and this is basically looks for a number of elements, particularly elements which indicate what your percentage ownership in a company is, that you should be using that with the ownership axes, and the ownership axes basically will have on it the company that you have an ownership stake in. So it just makes it very clear what you're holding in the company is and who the company actually is. So this rule actually has quite a few errors, and it's a change. So if this comes up, you can read also the FASB guidance on this. Okay, so that's basically the rules. They cover cover revenue recognition and pensions. So there is also some guidance that we've released. The first one is dimensional modeling guidance, and this kind of tries to explain the legal entities, the consolidation axes, and the ownership axes all together. We've received a number of comments on this, and you can read through it, but we're actually redrafting this at the moment. The comment had been there's a lot more, we need a lot more examples. So that is actually being is being fixed up for all the comments to make it clearer to people how this is supposed to work. The next one, guidance on revenue recognition. So we've received lots of comments on this because people are having to deal with this new standard. We had something up for public comment. In the last couple of days, we've taken a number of comments from folks, and we've just tried to incorporate those in. So if you've looked at this and you had questions about the revenue recognition guidance that we had before, we've actually added a lot more information into it to really address questions that we've been receiving about how this information should be disclosed. And in particular, it really addresses a lot of the issues around I've got 606 revenue, I've got non-606 revenue, what elements should I use, how do I distinguish them? For banks and financial institutions in particular, the revenue recognition and how it should be reported is a little bit confusing. So this revenue recognition guidance is really like an addendum to the FASB guidance, its implementation guide that's already been put out, but tries to address a lot more of the difficult questions or the difficult issues that arise out of it. So if you want to go to the next slide, Michelle, we can just kind of give a highlight on what this deals with. So basically it's additional guidance to complement the FASB implementation guide, but it also covers some different scenarios. The first scenario is just straight 606 revenue, and they've disaggregated it. I think that's pretty straightforward, but it just lays out how that should be done. Scenario 2, you have some cases where companies on their income statement may report 606 revenue, but then they also have non-606 revenue. What element should they use for that? So in the past, we've talked about this, and this just use the aggregate revenue element. And then some cases we have 606 revenue and non-606 revenue, but they're kind of mixed together, like in an other category. What are the elements you should do to and how you should report that? So that's discussed there as well. So if you want to see this, you can go to the public comment. You can see that revenue guidance, and you can read through it. And this is particularly useful if you actually are doing your reporting and you have questions about this, and you say, hey, we've got this tricky situation. You should definitely look at this, because I think we've talked to a lot of people and the problems that they've had with it, and tried to address most of their situations. And finally, scenario 4 is really revenue for financial institutions. A lot of these disclosures can be a little bit tricky, because usually they'll report lots of different revenue: interest-related revenue, non-interest-related revenue. Some of it's 606, some of it isn't. How do we break it up across different products? So it kind of addresses it. We have some complicated examples on there and how those should be treated. The other things that were added to this was subtotals by product, and just to make this clear, and some of the more complicated disclosures where you've got multiple business lines and financing lines, and those are being reported. It's basically how you should deal with those, and if you've got multiple products being reported and there's subtotals in there, how that should be handled. And then there's just a brief section on selecting appropriate elements for these. There is some we have this revenue from customer revenue from contract with customers, which is the main element which folks are using. But there's been the need for people who wanted to have an element for revenue not from contract with customer. So we've suggested an extension element that should be used for that. The FASB will be adding that element to the 2019 taxonomy because they've had a lot of requests for it. So you may want to keep an eye out for that as well. If the 2019 taxonomy comes out, make sure that you copy that element that they've defined. And we've basically put into the guidance to say, this is create this element in the meantime as an extension element and use this name for it. So at least then there's consistency across the board. And when the 2019 taxonomy comes out, it's easy to move to that. So that's kind of there. But I would recommend people have a look at it. And obviously it's probably not meaningful just to go and look at it because I know most of you are busy, but when you're doing the tagging or basically preparing your next queue, and if you have questions about how you should deal with some of these issues, this is available. So you should definitely be looking at that. And then basically the rules support this guidance as well. So Michelle, do you want to go to the next slide?
Great, well, thank you. Thanks very much. Now, for this portion of our webinar today, we're going to talk a little bit about how you can check your own filing and most importantly, how you can participate in the public review. So I'm going to go ahead and switch over to our website, and bear with me a second here. Okay, so as you consider participating in the public review, I think it's really important to get an understanding of the rules. But you can read through them, but you can also actually test them against your own filing, and that may be, frankly, one of the most effective ways of getting a sense for what the rules do. So here I am on the website, and you can see here in the carousel we have, this is the DQC 7th RuleSet and guidance. You can go straight there, or alternatively, you could click on the data quality button that you see up in the top of your screen here. And if I come here, it's going to tell me a little bit about our initiative, and then it's going to give me a series of links on the right-hand side. And first, I think what we'll do is show you how you can check your own filing. And now, many of you, obviously, you work with with software providers and service providers. Many of them are certified to run the rules. Some may not be certified, and that's something that you need to check with them on as well. But you can actually use one of our tools to check the rules yourself. So if I go to check your filing with data quality rules, here I can see that this is a free service. There are no fees associated with this. We just want to encourage the use of the rules, obviously. And you can read through the terms of service for the rules. There are a couple different options here. But the first thing you need to do is to check XBRL filings with data quality committee rules. You're going to log in. So I'm going to go ahead here and log in. I'm going to use my Google address to log in, just to make it a little bit easier. Okay, and this brings me back here again. The first thing that you'll see is the terms of use to use the rules. So you just want to scan through this. It's pretty basic. And then click through there. And then what we have down here is it's going to show me in this little grayed out box, here's how you can check with approved data quality committee validation rules. So I can either check just all of the approved rules. And as you know, we're up to the 7th rule set, which is out for public review. So we have rule sets 1 through 6, which are final and approved. So I'm going to go ahead and check version 7, which is the public exposure rules, plus the approved rules. So this is going to give me rule sets 1 through 6. Then I'm going to pick a file, and here, just as you submit your zip file, your XBRL zip file to the SEC, you could upload it here. So I'm going to choose a file, and I have one that I've prepared already. This is my zip file. Okay, and then check my filing. And what this is doing is it's running those rules against this filing. which may or may not have already been submitted to the SEC. But here you can take an existing filing you've already submitted and just take the zip file and run it through here, so you can check and see what kinds of errors you may get. And then here it gives us a report. And you can see here, Rule 65 is one that has already been approved. Okay, so this is part of it's actually part of the 5th rule set, or 6th rather, although it says here rule version 7. That's because I'm working with the 7th rule set, which includes 1, 2, 3, 4, 5, and 6, and 7. So Rule 65 is related to interest paid, where it's been used, interest paid net, and it's been used inappropriately. So it explains, what I need to do to fix that. And then if I go down a little bit further, okay, I'll see Rule 73, and this is related to plan asset categories. And again, this is one that Campbell was walking you through a few minutes ago. So this tells me, okay, that this error was triggered by something in my filing. And then you can read through the error message and determine what you think of that. And is it, do you agree with it? Is it something that you find problematic? Are there any comments that you want to come back to us with? Because that's really what we're looking for. Do these rules work for you? Do they make sense? Do you understand the messages that you receive? And that kind of information shared with us is really going to help us finalize those rules. Okay, so that's how you can actually run the filing. And you can do that on anything. You can use do it on a filing that you're planning on submitting to the SEC, but you have not yet. You can run the approved rules against it. So that's the first step to take. This is how you can check your filing with the data quality rules. We then encourage you to go to the public exposure page. And so if I click through here, this is the public exposure page. And I am already logged in. If I was not logged in, it would prompt me to, log in and register, and also click through a little legal click through, just to ensure that any feedback that I provide is freely given, that I'm not asking for any IP, that there's no IP associated with contributed comments, because that's important, because these rules are, and will always be freely available to issuers. And then I can read through each of these rules. And let's say mutually exclusive elements is one that I'd like to provide a comment on. And you can see, if you look on the left-hand side here, it says 3 comments have already been submitted. So if I click on mutually exclusive elements, it's going to walk me through the rule function. Like, what is this rule designed to do? It will then tell me what problem is solved by the rule. It will give me an example message. Okay, so I can read through that here. And it will give me some information for developers. And this is the template for the message. Then it will actually share with me other comments that have been submitted. So this is an individual who submitted a couple of comments. This is one, Chad Fleming submitted comments on August 7th and also on August 10th. And then we have a comment on August 23rd from Joan Berg. And then I can submit a comment as well. And so I could just, type my comment in here, and I have to click on these, by using this form, you agree with the storage and handling of your data, and then I can just post the comment. So that's basically how you can contribute to the public review. And again, we encourage people to do that as much as possible, because that will help us ensure that the rules are strong and that they're good and they work for everybody. Okay, so with that, I'm going to go back to our slides. And next we have CPE questions. So let me just come up here, and we're going to take our second set of polls. So our third poll question. Okay, so again, if you're getting CPE credit, please be sure to respond to this question. So it's rules included in the 7th rule set do not cover which of the following topical areas: revenue recognition, pensions, or business combinations. So please record your response. We'll give everybody about 60 seconds to do so. And so we're about halfway through. Okay, just about another 10 seconds here. Okay, I'm going to end that poll. All right, and we will go to our last poll question. The public review period for the 7th RuleSet ends on which of the following dates? September 10th, 2018, October 1st, 2018, or October 10th, 2018? So we have about 20 more seconds to go. Please be sure to record your response. Okay, and we've got about another 20 seconds to go. Okay, I think that's it for the poll questions. And then we have a few questions that have come in from our audience. The question is, does it have to be a zip file that you upload to your site, or can it be a Word document or a PDF? I mean, I can respond to that question, but Campbell, maybe you want to respond to that question?
Yeah, so just on this first one, and there's another question which is kind of related as well. So depending what you're submitting, if you wanted to take a filing and you wanted to validate it to make sure that it's actually, you know, if there's any rule violations, then you actually have to upload a valid XBRL file, and that's going to be typically that's just done as a zip file. But if you're making a comment and you wanted to put an example or something like that, you could also load up a Word document or a PDF document as part of a comment, rather than writing it in the box. If you've got something that you've already got written up, you can attach that as a file as part of a public comment. And then we had a third question. Someone was concerned about uploading, a pre-filed zip onto a website from a privacy aspect. So just to give you some of the options there, there is some software that you can also download and run locally that can run the rules as well, called a REL, and there's detailed instructions on the website about how you would do that if you've got concerns about that. We also do get an SSAE 18 prepared by an accounting firm, which basically looks at the way that it's set up. The filing itself is sent to the website it's run. We don't actually ever store the filing in any way whatsoever. So if you wanted to get the equivalent of a SAS 70 from us, then you can request that as well, and we're more than happy to provide that to you as well. So you can upload it, but if you're uncomfortable with that, you can download the software and run it locally, or you could get the SSAE 18, or the other option is you may want to say, hey, I'm going to take one of my prior filings, which is already a public document, and run that as well against the document if your disclosures are similar. So it kind of gives you, you kind of got three options there that you could choose to do.
Great, Campbell, thank you. Okay. I think those are all the questions we have so far. I just wanted to talk about some other programs from XBRL-US. I wanted to point out that, as I mentioned, many of the software applications and service providers that you work with today are already working with the rules. And one place you can go to find out where there are applications that have been certified to run with the rules is just by coming to our website. And you can just go to this URL that you see here. And what you'll see is a listing of all of the different applications that currently are certified to work with specific rule sets. So as I mentioned, we're currently on rule set 6 is a final approved rule set. And rule set 6 includes, everything from rule set 5, 4, 3, 2, and 1. And then, shortly, once we finalize rule set 7, you'll see these numbers switching to the current rules release certification of 7 for those applications that are certified to run with that rule set. So check this website. This will give you a good sense for, what applications are certified to work with the rules and have been tested to run them successfully. Essentially, that's what certification means. We actually run all of our rules through these applications to make sure that they run appropriately and provide the proper error messages. So that's one thing I wanted to mention. I also want to mention that we have a forum coming up in New York City. It's the XBRL US Investor Forum 2018, Powering FinTech. This is coming up on November 8th. It is a free event, as many of our events are. It does require registration, however, and you can find that on our website, or you can just go directly to this link. And we are particularly excited this year because we have a keynote speaker of the SEC Commissioner, Robert J. Jackson, is going to be joining us. So lots of interesting programs coming up. And we do have a number of additional webinars coming up. You'll hear more about those in the coming week or two. And we're going to be partnering with the AICPA on some of those programs. So with that, I want to thank Lou Roman from Merrill Corporation, who is the chair of our Data Quality Committee. And I want to thank Campbell Pride, our CEO from XBRL US, for joining us. And thanks to all of our attendees. We'll be sending out the replay from this event tomorrow. And thank you, and we hope to see you on future programs. Thanks very much.